In this video, we are now going to look at one of the most important areas when it comes to investing in cryptocurrencies. Risk. They say that cryptocurrencies are not correlated with the stock market, and therefore this is a great reason for investing when we're facing volatility or a bear market. However, that hasn't proven the case recently. They also say it won't last, but don't believe it. If you are investing to diversify your portfolio and reduce risk, think again. What are the risks of investing in cryptocurrencies? Let us use Bitcoin as the example here, as this is by far the biggest coin by market cap and as a result less risky than the other altcoins, assuming you're looking for a medium to low risk investment, although you could never describe Bitcoin as low risk. The first risk is price volatility. Obvious, right? Bitcoin is far more volatile than any of the S&P constituents. However, some limited research has concluded that if you use risk-adjusted returns, then Bitcoin is a superior investment than both gold and the S&P 500. In one piece of research, Bitcoin scored 1.97, gold 1.06 and the S&P 500, 0.25. The fact is, do you really want to experience this level of volatility? Can you sleep at night when your investments are up and down like the mood swings of a demented girlfriend or boyfriend? If the answer is no, then cryptocurrency is not for you. What are risk-adjusted returns, you may be thinking? This is a measurement to allow you to compare investments which have different risks and returns. It allows you to adjust the risk, return and volatility on each investment and compare it with other investments to establish which offers the superior investment opportunity. Choosing the right place to buy your coins is another risk often overlooked. Select one of the regulated exchanges, not one with no domicile and was only set up last week. Storing your coin is one of the most important considerations in this market. Most people store their coins with the exchange they buy through. It is nice and simple. However, it does open themselves up to the risk of these exchanges being hacked. And despite what they tell you, the majority of exchanges have been hacked at one time or another. So on that basis, you should pick an exchange that has insurance and is regulated. A big hack could lead to the closure of an exchange. The other solution is you store the coins yourself. But before you rush into this, take some time to consider your options. Will you store your coins on a USB? And if so, where will you hide it, together with a piece of paper with your password, so you won't accidentally throw it out? Estimates are that 20% of Bitcoin are lost forever because people lose stuff. This is a serious and often overlooked consideration. Let's see what Robinhood Crypto, one of the most popular crypto brokers for purchasing crypto, say about storage. Cryptocurrencies that you purchase on Robinhood Crypto are stored in a mix of cold or offline storage and hot or online storage. The majority of your coins are held in cold storage. We also carry crime insurance that protects a portion of the assets held across our storage systems against losses from theft. If you are a long-term investor, we would suggest this isn't the best way to purchase your crypto, but it is a hassle-free way. Unfortunately, hassle-free can lead to problems later. Let us dig a little deeper into what affects the price volatility of cryptocurrency investments. Reasons could include: 1. Government regulation or intervention, probably one of the biggest risks. Just look at Facebook's Libra. 2. Economic factors, both global and domestic, which will impact crypto prices. 3. Software bugs is a common problem. 4. The team ran off with the money, turned out it was a Ponzi scheme, another common problem. 5. Competition, just look at the file storage market on the blockchain. 6. Poor execution of the idea, this is another common problem with many get-rich-quick merchants entering the market. And 7. Low or no adoption of the platform, and then the development team give up and move on, leaving investors high and dry. This video was your first installment of the risks involved in the crypto market. In the next lecture we will go into even more detail.